Good morning, it's Tricia, and I want to go over Wednesday the 30th and show you when you should not be taking any trades, regardless of if you get a setup or not. I think that's the hardest part for traders, is to know when to sit on their hands. So hopefully this will help a little bit. And if you'd like more information on the setups, you can go to www.easyeminitrade.com. So I'm going to start out with the NQ, and notice this is our day yesterday. Pretty much held resistance and support until the end of the day when we finally broke it. First thing in the morning, we did have news coming out at 9:45. We do have a setup right here occurring at 9:34, but we do have the close of the previous day right above us. Somebody could have taken that and gotten their first target out of it. Totally up to them. It's actually almost 9:35 when that happens. So totally up to you if that was something that you wanted to take, and then if you're in when the news came out at 9:45, then great, you were able to capitalize on that move. We had the Chicago PMI coming out at 9:45, so I was not really interested in doing anything until after that. And so it came out, and even though this climbed higher here on the news at 9:45, even just after, there's no place to really jump on board. So unless you took this very first entry, there was really no place to jump on here, and that's just the way it is sometimes. And you were fine to take it because you were trading above the moving average over here on your broader view of the market. Closed above both moving averages here. Indicator above zero, histogram and the indicator line, so you're good to take it. Again, the question would be if you're going to get your target out of it, and that's all that really matters. Then we held resistance and support. You can see it here. This is a later support, but you can see the support here, Fibonacci 50% retracement, as well as an area that we were watching at 1767. So once you hit resistance, and this was also an area that we were watching, hits resistance, hits support, you can actually take this and buy it at support, expecting it to get back up to resistance. If you want to be conservative about it, you can wait till your stochastic crosses above 20 and then buy it expecting to get up to resistance. You're at resistance, you can sell. Then if you want to be conservative about it, you wait for your stochastic to cross below 80, expecting to get down to support. At support, same thing. It was like picture perfect range trade. And that's described in the ebook under the Keltner channels. Trading off the range chart, you just would not use the Keltner channels, but you can still use them on a 1-minute chart for range trades if that fits your plan. But pretty much nothing to do that I was interested in until we could either break lower or break higher, and other than the range trades. And so a good time to just sit on your hands. And a good indication of that is if you look on your 1-minute chart and you have your ADX on your 1-minute chart, that's the chart down below. I only have the ADX showing. Can't really use the ADX for anything trading off the 1.5 point range for our regular Kaboom setups, but it is helpful in telling you just stand aside, don't do anything. When you have your ADX below 20 and just flatlining, there's nothing going on. So even though you have trades setting up here, sometimes they're going to work and sometimes they're not when you're just going sideways. So it's important for you to determine, is there really a high probability of your trades working out? And if you look over here on your broader view of the market and this is what you see, just bar after bar, just overlapping, just going sideways, just stand aside, don't do anything, and let it pick a direction, let it break out or break down, and then look for an opportunity. Really not much that you would want to do. This setup during lunch, and even though you have the setup, it was actually a little before lunch, right here at 11:02, coming up into a resistance area that pretty much held all morning as support, and resistance here earlier. So not quite interested in that until it can break out through there. It breaks out, but notice our histogram is decreasing in size. It's not really giving us any indication that we'd want to get on board there, even though it continues higher. And really, this was a very low volume move, even though it was able to move higher. And if somebody took it, it worked out well. But I can tell you, when you see something like this, barely any green bars or red bars for that matter, it is a very difficult to want to jump in there. So sometimes you just have to let things pass, but if you took it, it worked out for all your targets. You did have a short setup during lunch, and that was right here at 12:37. Again, if you're trading during lunch. Later in the day, we took this trade here, expecting to get down to support. What we wanted to break the support area that held here, and at the same time, the ES was finally breaking its support area, so took it, and our first target was hit. Nothing to do here because you could see that we're ping-ponging back and forth in between support and resistance, unless you're willing to take some range trades. This set up later in the day, and this was at 325, almost 326, and I don't trade after 3:30, so a little late in the day for me to take it, but I called it in the room for anybody who was still trading. And unfortunately, I wish I did take it, and I was trading after 3:30 because finally, that's when everything broke down and you got that huge move. So you definitely would have got your two targets of your 2 and your 4 points, and then you could have trail stopped, all the way down until you got stopped out. So that would have been a huge trade if taken. And I just choose not to trade after 3:30. So for me, I have to be in something and already profitable by 3:30. If it gets too close, then I just pass because it just doesn't fit my trading plan. Here's the ES, same thing, sloppy. The morning you could have had a setup first thing at 9:35. You have room to the resistance area above you, and if you weren't already in, on the news when the news is coming out at 9:45, no place to really jump on board there. And pretty much the same thing. You're just going sideways. This wasn't as neat to trade as the range was on the NQ. The NQ was very easy, boom, 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 resistance, support. And then this occurred, the same move higher that we had on the NQ just before lunch at 11 something. And if you took it, it worked out. But taking this here, I would not be interested in it because you would be taking it right at resistance area that had held all morning long. So for me, I would be waiting to get above that, and no real opportunity to get in after that, because once you break above there, there was no opportunity. What we like to see is the bars to decrease in size and then increase in size. And as with the NQ, this move higher, we never got an increase in the size of the bars on our indicator. So if you took it, it worked, but again, if you get in the habit of taking those, majority of the time they are not going to work when you're getting in on these bars getting smaller. So this just means basically the momentum is decreasing. So just want to point that out. And again, important to know when not to do anything. Going sideways, and you break below here, your support area, you actually can get on here when your bars start to increase in size. This is right in the same area we took the short in the afternoon on the NQ. Was finally breaking support. That was at 220, and you could take it knowing that the close of the previous day is right below you and is likely to act as support. And same setup here at the end of the day. This one not nearly as clean as the one on the NQ. This one you get setting up just above the close. So if you took this here when everything first crossed back below 0, you have very little room down to 35. So would not be interested until it broke. You could have gotten in here when your bars start to increase in size and you break the support area, and that was at 325, and then you were able to ride that all the way lower as well. So I hope that helps, and it really is important to know when to just don't do anything. If you look to the left, always look to the left, either on the chart that you're trading or on a wider view of the market, either your broader tick frame, 15-minute chart, whatever you look at. And if it looks like it's sloppy, then just stay out. So I hope that helps. And you can check out the setups at www.easyeminitrade.com.